Hey, what's going on, everybody? I had a request to show how I scan for these setups, so I decided to go ahead and go with it. I'm going to scan for these setups. Well, I'll explain each scan criteria, the type of setups I'm looking for, and also when entering the trade, I'm going to break down how each trade is supposed to work and my expectation of each trade as well. Also, as far as stops, targets, etc. And if you haven't already, go ahead and hit the subscribe button. Hit the bell if you want a notification when the next video is coming out. If you didn't know already, I opened a little Facebook group. Yeah, it's free. If you have any questions, you can hit me up on there. Obviously, I'm moderating it, so I could answer them anytime. And so, yeah, let's dive in. Alright, ladies and gentlemen, so before you enter a trade, you want to consider the overall breadth of the market, which basically means what's the overall market doing? Is it trending upwards? Is it sideways? Is it selling off? Is it going down? Those are things to consider before entering a trade, and that's the way you kind of want to angle your portfolio. So I use the SPX, which is the S&P 500 index, to decide how I'm structuring my portfolio. So obviously, this purple line is so that one right there is my 200 SMA. That's my 50. This green one is my 20. And this red and yellow, red is for EMA, yellow is 8. So the 20 is above the 50 and they are both trending higher. So that tells me that I need to have more bullish trade setups. Alright, cool. So now I need to look for bullish trade setups. So that task is done. And what I do next is you need to consider the sectors. And let me get my little... Where did it go? 8. Alright, I'll do this. Okay, that was weird. For some reason, the computer wasn't doing what it's supposed to do. But here is the list of all the sectors that I track. So you have your utilities, energy, industrial, so on and so forth. And so here we need to, the task, or basically the goal right now, is to figure out what sectors are overperforming and underperforming in relation to the overall market. So overall market's going up. So now we want to find the strongest sectors. So ideally what we're doing here is we're in a strong market, we want to find the strongest sectors, and now we want to find the strongest stocks in those sectors. And I also have this little spreadsheet, and what I do is I score each sector from a -3 to a +3 based on their moving averages in the direction of the price action. And that's how we'll determine which sector is the strongest. So let's go to Alright, so first up, utilities. You see, obviously, so we got the 50 and 20 SMAs right there going higher. They just did a bull flag, and now they're breaking out and going higher. This particular setup has me confused because typically utilities goes down when the overall market is going up. It's a defensive sector. But nonetheless, prices or money's flowing into it and it's going up. So utilities is overperforming, and so the 20 is above the 50 and they're trending higher. Therefore, utilities will get a 3. right? Next is energy. So right, there's a 20-50 crossover, meaning the 20 crossed below the 50. You see we sold off, we found support, and we're bouncing higher to the 20 SMA. They're going lower, so this to me is, for this week, I'm going to give it a -2. And the reason I say that is because it looks like it's starting to bounce and may recover and may get above the 20 SMA. So I'll just give it a -2. Industrials. Alright, kind of moving averages are kind of going sideways to up. Obviously, overall trending higher. I want to give it a 1. Basically because it's slower moving up and it may pull back a little bit then before continuing the next leg higher. Am I missing anything? Apparently, I did not put it in. All right, next. Consumer discretionary. Same, a lot of the sectors look the same, so obviously up, going high, and I think it's a little over a cent, it's going to pull back a little bit, so I'm going to give it a 1 as well. So now that I kind of explained it, I'll start making these out a little faster. Healthcare. This is a 1 as well, and the reason I say that is because the 20 and the 50 are not as angled higher, they're kind of going sideways, and we may be finding support around this area, or sorry, resistance. And so I'm going to give it a 1 to 0, because we may just linger in this area for a little bit. So there's a 1 as well. Real estate clearly has boomed. So there was resistance right here. We finally broke that level of 40. Now it's going straight up. This is obviously an upward move. Everything's saying I would give it a 3, like a total bullish one, but it looks a little overextended to me. So I'll give it a 3 and we'll see what we find. Whenever you're doing these style of trades, these income style trades, it's a little bit more forgiving if you're in a little bit too early or late, but it's obviously still going up. So we'll roll with it and see what we find. Financials, give this a 1 as well. There was resistance at 31. You see consolidated here, dropped down when the overall market did, and now we're right back up. And also, the 20 and 50 are right there. It's trying to cross. And we may just slowly go higher, or we may actually break out higher. But nonetheless, it's bullish. So we'll give it... I'll give it a 2. We'll go with a 2. Materials. This looks like a 0. Give it a 0, and the reason it's 0 is because there's resistance here. And it looks like resistance here. So I'm thinking it may just bounce in between here. And another reason I think that, so I might find an iron condor in this sector, that'll be nice. And that's where you can make, as long as price stays between a certain level, you get all this theta decay as long as it stays in between, and that's how you profit from it. But also the 50 or the 20 and 50 are both moving sideways. It just looks all around like a sideways trading stock to me right now. Next is tech. This is a 3. Obviously, look how the 50 is just shooting higher, the 20 is just shooting higher, price is just going up. You just look at that easy to tell. That's obviously a strong sector. Technology. Telecom and biotech. The biotech sector, maybe a 1. Go with the 1 as well, because obviously 20, 50, they're kind of just crisscrossing around each other right there. Resistance, it's hit it 3 times, 1, 2, 3, and there's obviously support there. I'm gonna give it a 0. It's a 0 to me. And 0 doesn't mean you can't trade it. 0 just means you could do a sideways type trade on it to benefit from it. Next is consumer staples. I can give that a 2. Same thing as the other ones. I said overall market's pretty bullish, so if he's trending up, money's trending up, it may just slowly creep up. So I'll give it a 2. Next is telecom. This, I want to give it a... I'll go with the 1. I'm going to go with the 1, just simply based off of, here's the 50, here's the 20. They're obviously trending higher. There was support right here, it broke above. Right here was some, and it hit it, and now it's right there, and now we got to get up to 75. But it's obviously trending higher, but I think it's right here, maybe go back a little bit, then go up. So I think it's slowly going to go up, so I'll give it a 1. Alright, so now you're like, cool, alright, now we got these ratings or scores of each sector. So what we're going to do, so I go here, we'll go from largest to smallest. So it is obviously a bullish market, so now we need to find some bullish trades. So tech and real estate and utilities are the strongest right now, so let's go to tech first. And this is, and this is what I use as well. Go to FINVIZ.com and maybe this sector map and how the overall market is looking. So you could go to screener, all. Now I want to find stocks that are above their 20 SMA. Stocks are above 20 and above their 50-day SMA. Average volume. Some people go for 1 million, but I like 2 million because that means they have typically weekly options. Sector. So we say we're going to look at tech. And we want to make sure it's optionable. Alright. So this gives us 12 tickers right here. And what you can do is click charts. Then we can scroll down and see what we like. So Cisco, Diamond clicks on. I sure did. If that didn't make any sense. Hold on. Above and above. Okay, that's better. Now we have 59 because it's a strong sector. Most stocks just travel with the overall sector. So Adobe, that's going higher, and that's the one trade I just did last week. Applied Materials going up. Let's see, something that pops out really fast. I might look at AVGO, CRN. Alright. So we have earnings on the 12th, March 12th. Alright, now we got to map out our support and resistance. So we got this over here. Obviously, resistance right there. Right there. So it's all overall moving sideways to up. I may save this one for Iron Condor actually. Let's see. Because it perfectly hit that line and then dropped, which is this high right here. And these are all crisscrossing. Now let's see what we work with. So I'll show you Iron Condor, how this works. What's going on here? There we go. Alright, so if we did a 2-week Iron Condor, we want it to stay between the price. So we could do the 37.50 by the 310. 327.50, 310. So what this means is we do not think it's going to get above 327.50. And we do a $5 wide strike. And then we go over here and say we do not think it's going to get below 310 and buy $5 out. Alright, so this means that we will get $2 in credit if we place this position. So this is what the risk graph looks like. So we'll do this on a 1 contract basis, 1 position. And I'll explain how all this works. So right here is the expiration date. So that's when the options expire worthless. So we want the price to stay between 327.50 and 310 until February 28th. That is the goal. And with this being, or you getting paid $2, that means you're going to make $200 and risk $300 per 1 contract. And I'll explain this graph. So if you look in this corner right here, there's where it says February 17th and February 29th. February 17th is today's date, and this shows right here the value of what that position would be today. And now at expiration, that is February 29th, because this is Friday and that'll be Saturday, and it's closed on Saturday, so that's when they close the position. This shows your value of what the position would be. So this is a graph. Actually, before I show the graph, I'm going to do this. So if you look at that bottom left corner again, see as I move the mouse, the number's changing. So if it stays right in between here, you see you'll make $200 where it says February 29th, 200. That means your profit will be 200 bucks. Now if it goes outside our strikes, then we lose 300. So that's how this graph works. And so right here is your zero line. This is no profit, no loss. That is just a zero, it's a graph. And right here is $100 profit, $200 profit, $100 loss, $200 loss. And then down here is the price of the stock. So it's telling you, as long as price stays in between 310, because that's the one we sold. So 310 is right here at the top of this one. And then 327.50 is right here. So if price stays between there, that's what you'll make, the 200 bucks. Now what if it gets outside of it? Right here, this line, these are your break-even points. So you even have room outside of it. So what you can do is just move this over here. Look at that box at the bottom left. So your break even is that the stock is at 329.46 and 308.05 ish. So that's how an iron condor works, and you can make it wider, and it just adjusts your risk to reward is what it does. So what you can do is you go here to the stock, and like, well, what if that's too tight? So what if we make it a little bit wider, so more buffer? So like, what if you're right here, 305? Go here, so we don't want 310, we want 305, 300. All right, so now we're only get paid $1.65. So you're gonna look at the box at the bottom left. You are risking $335 to make $1.06 or 165 cents. But what it does is it allows more wiggle room on the bottom side. So to look at this on the chart to get an example of what it looks like, so we go here. So we'll go 303.10. $303.10, and I'll do a dot, and we'll make it a little bit wider, and we'll do yellow. Let's break even. So get lower, break even. All right, go back to the graph. Upper end mark, 329.10. Here. 329.10, yellow dot 2, and this is the upper break even. So that when you look at it, this gives you a visual aid of where the stock has to be by February 28th, which is, let's see what this one. So this line right here. So you have to ask yourself, where do you think price would be by this white line right here? I mean, personally, I'm okay with going a little further down for $2 because it may hit right here, then go higher. It can I just think it's going to stay sideways. So particularly me, I'm going to look at entering this trade, as long as I could get a decent credit for it. Now, what did the one where you got paid more look like? And we used the, what was it, 310? Yeah, because this was 305. All right, $2. So that just changes our lower strike, our lower break even to 308.10. Back to the chart. This, properties, 308. Boom. So it does tighten it, but you get $40 more per contract. And so what you could do is you never enter a position more than what you're willing to lose. So if all you're willing to lose is $300, then only buy one position. So 300, you make 200. It's a fair little iron condor. Me personally, I risk 2,000 per trade. All right, 2,100, close enough. So 2,100, we get 1,400. So that's how I would plan on trading that one. It's moving sideways, Iron Condor. That looks like a really good trade. I'm definitely be looking for that one on Tuesday. And what you want to do is, we're a little this. Right, and these are stocks I've been having an eye on. I'll go over those too. But this is AVGO. Oops, that is not exactly right, back to screener. I like to look for stocks closer to their moving averages. That way not so, because a lot of time when they get past far away from the moving averages, they pull right back. Let's see if I do. I don't want any China exposure. That is a China stock, a Chinese stock. CRM still looks good. I'm pull that one up again here in a minute. Dog. Facebook already in that one. Alright, we'll go back to CRM. It has earnings coming up, so I'm going to stay out of that one. Hacker. Earnings coming up. I'm going to stay away from that one. The reason you stay away during earnings is because the stocks can move very erratic. INTC, so Intel. Alright, I do like this one. It's holding resistance at 68. I believe it should be breaking out here soon. Let's see what kind of premium we can get here. So it's kind of forming a flag. Or an ascending triangle, whatever, however you want to look at it. Let's see what we could get for the 65s. Yeah, that's not enough credit. I like to get at least 10%. That is, so 10% of these will be 50 cents. That's not enough for that trade. You could bring it in tighter. But that also means you'll have to get more positions. I don't know. I'll watch this one. I'm not digging the way it's looking. But you can definitely keep a close eye on it. Maybe we'll see what happens. Well, we could do. I'm gonna do this. Oops. When it's at or above 68, I want an alert that it is breaking out. An XPI, see how that one. credit I can get. What I'm thinking is, since price held right there, I may hold up. I'm also thinking the 20 SMA may come up and hit it. But if we want to be more conservative, which would be a higher probability, we could go below the 20 SMA, which is at 133.44. So we could look at 133.50s or 133. So we'll go 133. Do 133, 130. Nah, we'll still we'll go to 120. Let me get $5 wide again. So 78 cents. So what this means, with a one position, look at that bottom, look at the box over here again. So one position gives you 78 bucks, and your max loss is 422, but you don't have to take that full max loss. So how would this look right here? So if the stop loss, we'll say, is the 21 SMA, we even trail it with that. So we'll go 133.40. Go here. So 133.40 is where you're risking roughly $73 to make 78 bucks. So it's a 1-to-1 trade. And that's for this high probability trade, that is a decent winner. So I want to put this one on the watch list, SPI. So, okay, so what does this mean? So I said I would break that down. So we'll go 133. So what exactly does that mean if I sell the 133? If I am selling the 133, that is saying I do not think price will go below. That's actually lower than that, but I do not think price will get below that. You have the moving averages going up, price is obviously trending up. That is all that means. It could go, so it closed right here, it could come down a little bit, you still make money. It could go higher and you make money even faster, but you just need it to stay above this line. This is the line in the sand. As long as it stays above there, you're profitable. That's all it means. So you sell the 33 put, and in the easiest terms, it just means it will not pass that line, or you do not believe it will. And if it does, you close your position for a small loss. That's it. And then you don't put any more money in than what you're willing to lose. So if all you're willing to lose is 422 bucks, buy one to get 78. But you could adjust it to any way. But say you don't have that big of an account, say you have $1,000 account, but you don't want to put 42% of your account in. Okay, so you come to your lower strike, and you're like, let's bring it closer. I'll make it $2 wide, or sorry, $3. Now your max loss is $246 to make $54. And if you have $1,000 account, that is a 5% return for a few days. And say if you don't want to risk that much, you could make it as low as $1. You only get $19, and you're only risking $81. But if you did that and you had $1,000 account, that is at almost a 2% return for that time frame. So you can adjust it. So it is all variable in how you place these trades or your strike prices. You can manipulate it to however you wish. And if you want to be super aggressive, I won't do the 135s. I was entertaining the idea, but if I do it, I want to enter this 20 SMA, or that's my stop. So I want to do the 133s like I just showed. And as long as I could get 10% of the spread, which would be 50 cents, then I'll enter it, and then only max risk the total amount you're willing to lose, but then you can still have your stop at the 20 SMA, so you don't have to lose the whole thing. So example for me, like say your max loss is 1,000, you're willing to lose 1,000. Let's say here, that is a 1,200. All right, so 844. Your stop is at 133.40. So right here, you're losing 148-ish dollars to make 156. I hope that all makes sense, and if it doesn't, let me know in the comment section below. I'll join that Facebook group, and I'll try to answer them more clearly, and we can hone in on where I'm not making sense or where your questions may be. And the run is clearly running up. All right, next, what was our strongest sector? Another strong one, real estate. And let's look for. Actually, that way this video isn't 6 hours long. Is what I'll do. So that is how I scan for trades. I find the strongest sectors. I look for the strongest. I look what the overall market's doing. Then I go to the strongest sectors. Then I narrow it down to the strongest stocks in the strongest sector. So that is how you have. It's basically like having the wind in your back. And then you go to the strategy that I enjoy doing, which is high probability. I believe statistically, 86% of options expire worthless, so that's in your favor. And then you're going with the trend, that is in your favor. You're playing the chart pattern, that is in your favor. If you use like the moving average as like a stop area, that is in your favor. So you have a lot of things helping you out in this trade. And like I said, I use FINVIZ Elite. And then if I wanted to look in a different sector, I could go to financial, click financial, and I'll bring up all this criteria for stocks in that area. And then that is how I look. And instead of just continuously scanning and making this video really long, I'm just going to go ahead and show you these other stocks I already had on my watch list and explain those. That way you get a better understanding of how it looks. So these are the two we looked for. Momo. All right, this one is what I like for the downside. This one looks really good. So what happened here? See, price sold off, rallied to the 200 SMA, closed on a shooting star candle, and then it is confirming lower again. Technically, that is a bear setup, and I bet, judging by how this is like that, this is probably a weekly bear flag. So it's on a bigger time frame, it's confirming down. So what I'm doing, what I expect this to do, this green line, remember the 200 SMA, I'm expecting it to push price further down. And I do not think it'll break the 34 because that's where this 200 SMA is, this purple line. So once again, go to the risk graph. Let me get on a one contract basis. So we're on, here's the options chain. And if you didn't know, it's puts on the right, calls on the left. Alright, and we'll do it from the more conservative time frame. Say I do not think it's going to break 34. No, we're using the 20 SMA. So 40. So this is a $2 spread at 33, 35. That's $2 difference. 40 cents. That is a 40% return on the entire spread. So where's 33 on the chart? On here. 33 is right here. And you can see that it tapped it several times. It fell, so support or resistance is now support, or hold on, support is now resistance. So therefore, if it did hit it, I think it'll come back down. So if we're expecting it to stay below, we have the 20 SMA right here pushing price further down. It seems like it appears to be a high probability trade. So 133. Here, 133, 135, boom. So on a one contract basis, you could risk $160 to make $40. and then your break even is at 33.42. Now where is my stop? Like I said, I'm going to use 33 as my stop. I believe if this 20 SMA, it may bounce a little bit, but I'm going to use 33. That's my line in the sand, if you will. So 33, I'm risking roughly $25. I'm risking $25 to make $40. That's almost a 2-to-1 risk reward. So you have a high probability 2-to-1 risk reward. So you can, if you wanted to only risk, see, $800, you risk $800. Max risk is $800. Then at 33, you're risking almost $123 to make $200. So that's a bearish one. So like I said, what that means is you are expecting price to stay below 33. You do not think it will pass this line. You do not think it's going to go above it. You think it's going to stay below it. Another EXP. This one is looking good. It's clearly, it just broke out. So it was right here hitting resistance, came up, and it broke out right there, then confirmed higher. So this one, I want to look to sell the 32 and probably buy the 30. So, oh, I even said the 33. Let's see here. What did I look at earlier? Where's 33? Right there. I think this is one I was gonna plan on just taking and watching, because I supposed to be 32, 30. How much credit we get? 22, so roughly 10%. It'll be a high probability 10%. I don't know, the 133 looks more appealing to me, because you get $40 credit, so slightly more than 10. But yeah, I'll watch this one just to see how it's gonna act. And this is PBD. Alright, and so for this one, I'm also thinking bearish go down. So there is obviously resistance right there. Sold off below it, found support at this line. Bouncing up from this, so I'm looking for it to turn back around and go down. These particular quick turning points is when I tend to make my most money. You go here, so you get, because you can sell the 38 and buy the 40, which is $2 spread, and you get 35 cents for it. So 38, go back to the chart. Where is that on the chart? 38 is obviously right there. You also have this blue line right there, which is the 50 SMA, which may also hold as resistance. So it's rallying to resistance, you sell resistance, and then write it back down. So if you do not think it will break the support line, sell that 38. And that also means you do not think it will break that 38 level. And all you needed to do is stay below it. If it was to come up and just chop right here, you're still making money because of theta decay. If it turns lower, then you make your money faster. And then if you look at the risk graph, you get 35 cents, and your stop is also 38. So at a one position basis at 38, you're risking $25 to make $35 because your max gain is 35. But your overall max loss, if it completely shot up against you, then you lost $165. So I hope that makes sense. Yeah, that's all I have on this watch list, and that's how you scan from. You just go to each sector looking for the high probability setups, and those setups, all those setups are in that video that I presented as Sharkman or whatever. And that is, I look for those same chart patterns in the strongest and weakest sectors, and I just play them, I find support and resistance, and I sell outside of support and resistance going with the overall trend. That is all it is. And if you have any questions, like I said, go in the comment section, write it, type it up, and I will definitely answer you. Or go to that Facebook group. The name of the Facebook group is K.AshCapital. If the link below isn't working, then go ahead and search in groups on Facebook and request to be in there. And if I enter these trades, I'll record it or make a video about it so we can discuss, so you saw the scanning process, and then you can see that entry process as well. So thank you for watching, and take care.